Hey guys, Mike here. So today we're going to talk about Palantir stock and SoFi stock news. Both had earnings, so we got massive amounts of data and news coming out. Obviously, SoFi is headed to 30. It is skyrocketing up 17%, I believe, today on their earnings call, while Palantir did the opposite and dropped double digits, which was shocking because the numbers were actually good. So I'm going to go over the real reason they actually sold off here. And, a couple other things that come out in the news about them that got no headlines because of the earnings call as well. And plus, I will give a big warning to SoFi stockholders, of course, which I am one, in this video to watch out for. And we're going to hear from the CEO himself on this. So make sure you pay attention to that. If you're getting out of this, please just hit the like and subscribe button for me. Share it on Twitter, Facebook, all that good stuff. That's all I ask from you. And let's go ahead and start off with SoFi stock first. And guys, starting off with SoFi stock chart here, you can see the big gap up once earnings got reported. It was a very, very good quarter. You can see that next resistance line, which has had a lot of trouble breaking through and staying above, is right here around the 24.34 mark right there. You can see we've been above it one time really and rejected it another time. And so be interested if it can get through that. And so you might see a little sideways action here for the next couple of days, but we'll see if it can bust through and then stay above that resistance line. And now what I want to do is hear from the man himself, the CEO of SoFi, who, just as a side note, he's a veteran, I'm a veteran, so happy Veterans Day to all you guys out there. And so let's go ahead and hear what he has to say about SoFi.
Your stock is up significantly here in the pre-market. You are in the crypto space. How are you able to get it done in the quarter?
Yeah, our record revenue results really reflect the diversity of our business. We built our business focused on the mission of helping people get their money right so they can get to the point that they have enough money to do what they want, which we call financial independence. And in order to do that, we have to be there for every one of their major decisions in their financial lives and all the days in between. So we're a one-stop shop for financial services products all on your mobile phone. And because we have that breadth of products to serve our members, we have businesses that benefit in low interest rate environments, in high rising environments, which we're currently in. We had businesses that benefited in the stay-at-home sector shift, as well as the reopening trade. And that diversification is allowing us to really focus on those areas that are in greater demand, as opposed to companies that may be only in crypto or only in brokerage or only in lending, or benefited disproportionately from stay-at-home and now are getting hurt by that. So our record revenue in the quarter really reflects a benefit of our strategy playing out into three diverse businesses and the successful execution by our team.
And you see here, guys, here's the highlights right here, record GAAP and adjusted revenue and fifth consecutive quarter positive adjusted EBITDA, total year-over-year membership growth of 96%, added 377K this quarter, total products up 108% to 4.3 million. And SoFi Money, SoFi Invest, and SoFi Credit Card drove 79% of new member growth and 73% of cross-buying. And you can see right here, guys, just steady growth of their members right here, as well as the product growth. You can see right here, 108% for the quarter. And we go with this one. This is the one that kind of worried me a little bit. I talked about this a couple weeks ago, the Galileo accounts. You can see it grew 80%, but if you scroll over a few quarters, you can see we were driving all the way up to hit a peak in Q4 of 135%. Since then, the growth has started to slow down from 130 to 119, now to 80%. So that was definitely a little concerning for me. And you can see the growth year over year and what they have already year to date. So they'll go over $1 billion this year for sure. And then you see the adjusted EBITDA right there, finally in the positive. So that'll continue to grow when they report fourth quarter. And more importantly, the guidance, which they actually raised their guidance. So 272 to 280 million of adjusted net revenue. They're going to say it's up 49 to 55% year over year, and then 2 to 5 million of adjusted EBITDA as they continue to invest to drive their growth. And of course, the one thing that didn't get any news this week was the new partnership they have. And the one thing I like about the CEO and the company is they're always continuing to try to bring value and new resources to the members as they're cross-selling their products, like I told you. And you can see right here, they partner with the Financial Planning Association, and what this partnership entails is it'll provide FPA members with preferred rates and exclusive access to the suite of financial solution services and educational resources that are provided by SoFi. And so I think it's a very smart move and just another, product or service they're providing to their members and stuff. So, the other good thing was, we go over to our friends at TipRanks. And we end up seeing a couple extra buy ratings here over the last few days. You got Oppenheimer yesterday with a $20 price target and a buy rating. Rosenblatt and Jefferies both came out with buy ratings 2 days ago between $26 and $30. And if we go over to the left here, I told you we like to track the website traffic. So now that that quarter is reported, we go ahead and see what was happening in October, because this is going to be the next quarter getting reported. And if we scroll down, we can go ahead and see that they have nice growth already coming out of October. 50% monthly growth, 50% quarterly to date growth, and 45% year-to-date growth coming October. And if you want to sign up for TipRanks, try it out, you can go down in the description, just hit that link right there, and there's a 30-day money-back guarantee on it. So give it a try and see what you think there, guys. And so all the numbers and everything is looking good for SoFi. And if you didn't listen to the earnings call, I'll tell you right now, I don't blame you because they're very boring. But here's the big warning for anybody who holds SoFi or is getting into it. You know, the one thing this whole thing hinges on, honestly, is the bank charter, okay? And so I want you to listen to the CEO when he's questioned about that. And this came out yesterday. So, listen to his answer and tell me what you think, and I'll tell you what I think afterwards.
Anthony, I sensed on the call last night a slight shift in tone around the prospect of a bank charter. Do you think that's coming in next year?
There's no defined timeline for an application of a national bank charter. We applied in March for a change of control application for a national bank charter, which will really give us great competitive advantage. It lowers our cost of funding, allows us to give consumers lower interest rates on loans, higher interest rates on checking and savings. It really will be a game changer for us. It takes a lot to be able to get approved for a national bank charter. It's a really unique asset, and it comes with a tremendous amount of responsibility. We're really encouraged by the process over the last 9 months with the Federal Reserve as well as with the OCC. We've gone through their exams. The feedback has been constructive. There's a number of other steps in the process, and we're working diligently with them to get through those steps. But we're encouraged by the point that we've reached at this time, but it's never done until they give you the approval. So there's still uncertainty to it, and we think we've done everything we can on our end, and now it's about a matter of getting through the final stages of the process successfully.
And so hopefully by listening to him, you see how important this is. When the CEO uses the word game changer, okay, that's what it is. That means if you don't get the game changer, your stock is going to plummet, all right, because it's going to hurt the business dramatically. They are really depending on this bank charter. And as I told you a few weeks ago, what's happening? You got an open lawsuit that's still going on that I haven't seen any news saying it's settled yet. And if you're a lawyer or a law expert, somebody tell me, I couldn't find this, I tried looking it up for us, that, are they even going to be allowed to approve the bank charter before this lawsuit is settled? I would not think so, including the board members saying that SoFi should have never been able to purchase this bank anyway. Okay, it was done illegally, basically. And so I would think they would want to settle that first before approving this bank charter. And so, but it's a big deal. I mean, it is a game changer, all right, as far as rates, everything they can offer to the members, all that stuff. It will put so much at the bottom line for SoFi and put them on a whole different level. I showed you that other company, Lending Club, they got theirs approved early this year, and of course their stock is skyrocketing. So, and it was a game changer for them. And so that's the big thing. And so we're just waiting, okay? So if the news comes out positive, they got it, the stock is going to soar. If it comes out they didn't get it, or this guy wins that lawsuit, then you can expect a major double-digit drop on the stock. And so I'm just putting that out there. I don't sell stocks. I'm just trying to put the facts out there to you. So let me know what you think about that. Let me know what you think about the quarter that SoFi reported and stuff. So now we're going to go on to Palantir, which is kind of the opposite picture as far as how the stock's performing, but not so much the numbers. And we can see right here, massive drop once they reported earnings, and then the next day, another drop as well. And so it's kind of recovered a little bit today, as you can see. It's trying to find a bottom. And if we scroll out, one thing we got to look at is what is the next support level. This has already broke through that one. And the next support level is around a little over 21.20, somewhere in there. And so we're going to see if it breaks through that or not. And if we just go into the numbers really quick here, guys, you can see Q3 revenue grew 36% year over year to $392 million. That beat $385 million projected, by the way. Q3 U.S. commercial revenue growth accelerated by 103% year over year, which was great for them. Added 34 new customers. Commercial customer count increased by 135% since December 2020. And then if you look over here, you got adjusted free cash flow. You can see we're in the negative, now we're in the positive. And so, it's an improvement of 172 million year over year, representing a 30% margin. And then if we look at, total remaining deal value, which means they don't get any more deals, they still have up to $3.6 billion they can work on there, which is fantastic. Commercial deal value grew 101% year over year to $2.2 billion. And then more important, you can look at this, we're going to talk about this in more detail, but you see the government contracts. If you look at 2019, 2020, revenue growth of 35%, 77%. And then as it went through the quarters, you can see the government growth slowed down dramatically, right? But then you look at commercial. You look at Q1, 19%, Q2, 28%, Q3, 37%. And that's what they kept getting, dinged on this whole time. And then, of course, the forward guidance, revenue of $418 million, they think they're going to hit in Q4. Adjusted operating margin, 22%, which is what they projected for the last quarter, by the way, and beat that. Full year 2021, they think it's going to be $1.5 billion. Adjusted free cash flow of $400 million. That's up from $300 million previously. And still projecting 30% plus growth until the year 2025. And let's not forget they increased their cash on hand to $2.3 billion, $0 in debt, 3 times as many assets than they have in liabilities, and they have no goodwill. So that means it's real, not fake. They've proven they can increase their margins as they scale up all their different platforms right now. And obviously you saw the commercial growth, which is the big one that they used to get hammered for. And now they're improving that. But what do they get dinged on? They say, oh, your government revenue growth is slowing. And so it's like, okay, you can't win for lose. You want to see the commercial revenue grow much faster, right, than the government, so we can have that equal 50-50, if not more, or at least get to see the commercial growth and revenue take off above that, which I think we're seeing. That is going to take time. And I think you're starting to see that sales force they hired and continue to hire actually working for them. And so, the big question is, why do they sell off? Well, one, the executive did a terrible job on the call. It was an awkward call. I didn't like listening to it at all. He was dodging questions, all kinds of stuff like that. I didn't understand why, because the numbers were good to talk about. And the CEO was not on the call for whatever reason. And so I think that hurt them. Second of all, the valuation's rich to begin with, right? I mean, they're trading at 30 times this year's sales. But to keep that in context, Cloudflare is selling at 100 times this year's sales. And then CrowdStrike is actually selling at 50 times this year's sales, okay? And those have higher revenue gross projected, but, it is not that much higher than what Palantir is. And so, yes, it's a rich valuation. So therefore, if they don't hit perfect or just knock a home run because the expectation is so high, they're going to get harder than anybody else for sure. And so, look, I told you before, analysts don't like this company. That's just the way it is. I mean, I think it's Deutsche Bank out there. They either got them as a hold or a sell. Yet, when you look at the sources, they've actually increased the amount of shares they hold of Palantir. I mean, it's just kind of nuts to me. But, that's the way it works, okay? And so I think that's why you're seeing that. I think, obviously, the stock has to find a bottom. And so that's why I say this is a long-term play. If you're short term, you can forget about it. But, the bottom line is, if they, by 2020, I think it's 2024, 2025, they can reach $4.5 billion, which I believe they will, in sales, then there's no doubt the stock can absolutely, 3 or 4x for sure, maybe even 5x. We'll have to see on that. And so, that's the bottom line on Palantir. I'm still a believer in the company. And I think, you're going to see it between 20 and 30 for the rest of the year, somewhere in there. We'll see. I think if the market continues to run and we have, the Christmas rally and everything, and institutions keep pushing, the stock market higher, this could end, probably the year end between 26 and 28 maybe is my guess. And then we'll go into next year. But, again, expecting a good fourth quarter. They tend to always be earnings anyway. They always sandbag. So, what I'm glad to see is the commercial side is growing. And there was even a report out about them, this guy, I'll say guy, I'm not going to say what I want to say, but this guy, said, oh, well, on the commercial side, you can't count the SPAC revenue, right? And I'm like, I'm sorry, what? Because they invested in those SPACs. And that's just stupid, because I'm like, are they cutting you a check? Yes. You're getting paid to provide a service. Yes. Then what's the problem? And it's actually almost even better, because if you're investing in the company, you actually have say in what goes on in the company, then they're way less likely to cut your contract, right? I mean, it just doesn't make any sense. And I'll give you, here's a prime example of what I'm talking about when it comes to Palantir, how sticky they are, you know, how, to me, there's nobody else like them. That's why they're building that moat of what they do, and that's why they're in so many different industries. They're not depending on one industry, they're depending on many different industries. But you know, you look at what they're doing with Rio Tinto. You can see right here, this came out on the 8th, didn't get any kind of play whatsoever. But you know, Rio Tinto is a mining company, which you wouldn't think Palantir would be in. You know, they put in Palantir software, started running it, and achieved 150% improvement on its excavation rate. And of course, something else to look at is, what did Aunt Kathy do? Well, Kathy Wood went shopping, and so her point has not changed on Palantir. She ended up buying, almost 1.8 million shares there in ARK-K. And then we scroll down to ARK-Q, bought another 230,000 shares there. And then we go down to ARK-W, and you can see she piled on another 400,000 shares there. And so obviously she still believes in Palantir and continues to load up on this stock. And it will recover like it always does, because the numbers are fine, guys. I mean, give me a break. And so, you know, we'll see what happens. Let me know your thoughts on Palantir and SoFi in the comments, what you think. And I definitely will be shocked if SoFi is not above 30 by year end. The only way that's not going to happen to me is if they don't get the bank charter, some news comes out about that lawsuit. Okay, guys? So I hope you have a good weekend. Hope you have a good Veterans Day, guys and girls. Really appreciate you. And hit the like and subscribe button. And if you got anything out of this, sure appreciate it. And never forget to hit that link down there in the bottom. Sign up for a BlockFi account to earn 9% on your stable coins, 9.5% on your Tether, and 4 to 5% on your other cryptocurrency, as well as earn the 1.5% back on Bitcoin for every purchase you make on that credit card, guys. I will see you later.